Hello. Could you please all confirm whether you can see my screen and listen my voice? Okay, Amarjit. So the topic of today is the future trading. Actually, I'm out. So initially, I thought just to cancel this, but I thought just to have a quick conversation rather than canceling this webinar. So let's quickly go through. As I could see, there are just only a handful number of people here. So future trading. We'll see the concepts and the strategy of the future trading, right? So in this, what is future? It is a leverage product, and I'll explain all those things in detail about all those things. And it's an artificial product created by the exchanges, and it's derive its value from the underlying on which underlying that future has been traded for. Risk management, it's a key principle once you are dealing with the futures. And mainly, I'm trying to introduce a new concept, which is the derivative portfolio. That's a unique concept in India, and I'll see how that could be beneficial to our traders, right? So let's go and study these things in detail about what this means. So, what is stock? Let's first understand the stock and then we'll understand the future. What is stock? It gives you a ownership in that company, means whatever be the percentage or the number of shares that you have for that company, you have accordingly that kind of percentage wise ownership in that company. Unidirectional means whenever you buy any stock, if it goes higher, then only you will make profits. So the direction you could have in stocks is just one, which is in upward direction, right? And if the stock price remains as it is, or if it moves down, then you may occur losses, sometimes huge losses. In stock, you have unlimited time ownership. If you buy something, if you buy certain stocks, then you can keep this for as many years as you can. Means nobody is actually forced you to sell it until and unless you want them to sell. So means you can keep it for indefinite period. As I said, that nobody can force you to sell it. It will be absolutely your choice whether you want to keep it or sell it. One more thing in stocks, you have to pay 100% money to own them. If you want to buy, say, 10 stocks of SBI, which is now trading at something around 335, so you have to pay accordingly the full 100% amount to own that stock. Another thing with the stock is it belongs to the company, right? And if you are having stocks, you may get dividends, bonuses, or the splits if that happens in that particular company. In stocks, you are solely responsible for the losses if it goes down. And in stocks, there is no compulsion that you have to buy certain amount of shares. You just simply can buy one share and that's it. In stocks, they are limited in number, so you have a limited supply because the particular number of shares of a particular company is defined. And if there is less interest in the participants over the market, about that particular stock. So people will face liquidity issue, because say if you have buy something and you want to sell something, you need a seller. And the spread, which we have talked about during the course, if there are not enough number of participants who are interested in that stock, so you may have the spread issue. In other sense, the liquidity issue. So the price at which you want to buy or sell depends upon the interest of the participants, which creates a lot of problem while buying or selling individual stocks, right? So these are the characteristics of the stocks. Now let's go to the stock future. What is this? Stock futures are actually created by the exchange, so they are owned by the exchanges. And as it is an artificial product, so it can be created unlimited times, means exchange can create unlimited contracts of any particular script. In stock futures, you have time bound ownership, means in stock you have unlimited time ownership. In futures you have time bound ownership, but there is a process called rollover, where you can actually shift in different months. So in a true sense, if you see in a nutshell, in futures you can also have unlimited time ownership, but if you go with the contract wise or the month wise, then it has a time foundation. It is a discounted product. You will get a high leverage. So depending upon your margin deployed, actually you control a lot of more money than you have in your account. We'll see about how much leverage and all those could be. There is a very interesting concept of the leverage, which we will deal in detail. Every futures have three contracts. Near month means the current month, next month, just next month after the current month, and the far month, 2 months from the current month. All the futures in India, they expired on the last Thursday of the month. So in whatever be the month is, just like we'll see in all those contracts, what is the last Thursday of this month, in which that corresponding contracts of near, next, and far will actually expire. Now let's see the concept of leverage, right? So let's go and check it on here. So let's see and start with the creating our market watch here, and then just say I enter NSEFO future stock, and we are dealing with, say, Infosys. And you see, as I entered Infosys, you have three contracts: 30th of November, 28th of December, and 25th of January. So we are interested in the current month, which is 30th of November. I submit it. Then I again would like to see another thing, which is PSU Bank, NSEFO, future stock, SBI, and State Bank of India. Here I am also interested in the November month. I submit. Okay, just rewrite it. NSEFO, future stock, INFI, current month, submit. Now I'm interested in some other scripts, say something from the automobile industry, say Tata Motors. So NSE-FO, future stock, Tata Motors. And in this also, I'm interested in the current month. So I get this. So I have got three stocks, SBI, Infosys, and the Tata Motors. Now, what is leverage actually? Hmm? So let's see with different examples here. This Infosys, Tata Motors, this is all the examples which I have discussed in the class, but few people haven't seen my screen, so I'm discussing it again, right? For Infosys, if I have to buy something or sell something, the lot size is 500 and the current price of the Infosys is on a future it's 991. Basically you have to do the calculation from the spot, but for the timing there is not too difference, it's just 2-3 points. So for understanding the concept, we are just taking the price as of future. So what would be your contract value? Contract value would be your I delete all those things. So what would be the contract value for Infosys? Will be equal to lot size, which is 500, multiplied by market price, say 990 for the instant. So the contract value is 4,95,000 for the Infosys. And the margin which is required, which you can see if you go here on your terminal, click on start, you have a option called the span calculator. If you click on the span calculator, here I'll put this here. So in this, what you can get, futures, and I'm interested in Infosys, Infi, current month contract. By default, it will select the lot size. Then I'll select, say, I would like to buy lot size, and then I add. And then I calculate the span, what is margin which is required here. So here I get the span and the total margin. The span margin, it's 35,820, which is fixed and that has been charged by the exchange. So everyone has to give this margin for sure because that's the exchange requirement. And then you have another thing which is called the exposure margin. Exposure margin is the margin which your broker will charge. In our case, the Motilal Oswal. Here we can do some leveraging as per the individuals. So in a nutshell, the total margin required to buy one lot of Infi future current month is 60,586. So let's do our calculation here. And the margin required is 60,000. Is that 60,586? 60,586. Right. So what is leverage? Means from 60,000, this is leverage. Leverage is equal to the contract value divided by your margin. Means you have a leverage of 8.1, means roughly 8 times, right? So means what you are doing here, your margin blocked is 60,000 and you are controlling roughly around 5 lakhs of Infosys value. So just from the 60,000, you are getting approximately a control of 5 lakhs of Infosys. So here you have a leverage which is 8 times. And also remember, Accordingly, your risk also increase with the 8 times, right? So whenever Infosys moves 1 point up or down, you will have a risk of that particular lot size, which is 500. Means if Infosys moves 2 points up, you will get 1000, and Infosys moves 2 point down, you will have minus 1000, right? So this is the concept of the leverage. And then again, say, let's see the what is all the calculation about the margin and the leverage and the risk about the Tata Motors. Okay. So here I go and I select the Tata Motors. Say I want to buy Tata Motors. Here the lot size is 1500 and the price is, I'll just say, 416, right? So here what would be the contract value is equal to 1500, which is the lot size, multiplied by its value, which is 416 as a rough, right? 41416. So 6,24,000. And now let's see what is the margin requirement to hold that contract value of the Tata Motors. So again, I go here and then again I go to my span margin calculator and here I select Tata Motors. Tata Motors November contract. Here I'm also interested in buy. You see by default the lot size has been selected and I just remove this one first and then I add it and then I calculate span. So to buy or sell one future of Tata Motors, the span margin, the requirement by the exchange is 46,275 and the exposure margin is 31,151. So in total, you need to have 77,426 in your account to buy or sell one Tata Motors future. So let's calculate. So here, what is the total one? 77,426, right? So here, if I go and select my sheet again, so 77,426. So what is the leverage here? Will be equal to my contract value divided by my margin blocked, roughly around also the 8 times. So my risk and reward is also a multiple of 8 times, right? Means if Tata Motors move 5 points up, I'll get 7,500 plus, and if it moves 5 points down, I'll get minus 7,500, right? So this is a typical calculation for the future contracts, whether you're gonna buy or sell, and what is the leverage and how should you control your risk and reward. In a nutshell, everything, whatever you do, you should be in a particular state of mind that what would you like to do. If you are dealing in futures, roughly you should have a risk capacity in between 5 to 10,000. That is very much required. If you don't have that risk taking capacity, don't go to the futures. And if you have, then a handsome amount of money can be made in the future trading. And lot many people are doing this on an intraday swing or the positional call. Let's see one more thing about the index also. We have seen the stocks. So let's see about the index. Say if I go to Nifty. Let's see what is the contract value of the Nifty. Nifty is at 10,214 a spot. So the contract value of Nifty would be equal to, the lot size is 15, right? Equal to 75 multiplied by 10,214, right? So multiplied by 10,214. 7,66,000. Now let's see and check what is the margin requirement to buy or sell one lot of Nifty. So here I go again on my span calculator. I remove my previous entry, and then I select Nifty current month contract, which is 30th of November. Here you see by default the lot size is 75. Here I put, say I want to sell one Nifty and add, and I calculate the span. So to sell one lot of Nifty, the span margin, the exchange requirement is 37,000 and the broker requirement is 23,000. So roughly 60,000 rupees you require to buy or sell one Nifty future, right? So here I go again to my sheet and I write what is my margin requirement is. Again, I have to see 60,885. So again, I go back to my sheet, 60,885. So my leverage here will be equal to my contract value divided by my margin blocked, which is something around 12.5. So I have a multiple of, in Nifty, 12.5 as a leverage, right? So this is how you calculate the leverage, what you have, what is the contract value. And always remember, most of the time people confuse this contract value as their capital. It's not like that. Your capital, it's the margin blocked. So whatever the margin that has been blocked to deal with that future contract, it's your capital, and accordingly you have to trade so that you know what is the profit percentage based on your margin block. Please always remember that. And now if I go again here and then I go and see how you gonna trade the futures or anything. So my approach, I'll go with this SBI chart, and here I go simply with the daily first, right? So I don't need this option calculator here. So here you see I have done few analysis about SBI, and here it is breaking my initial resistance zone. So I still feel SBI has an upside from this current price till 340 or 345. So I can give you one trade for tomorrow morning. If you want to do some trading, just simply buy one SBI future. Put your stop loss 2 points or 3 points below, depending upon your risk appetite, and get the target of 345 or 350. Right? So that's how you can do all these kinds of trading. And now let's see and go for another thing, say, which is Tata Motors. Here you see, here I'll go with the daily chart. I just remove all the tools here. Okay. And here I would see that I will just simply draw my major support and the resistance band. My support band is here in Tata Motors, and my resistance band, long-term resistance band, is this one on the upside, and also I also have another resistance band which is here. So looking at the price of the Tata Motors, if I remove the pivots by chart settings and I remove, so here if I could see that it is in the midway, but here I also do have one support by Tata Motors for intermediate terms, which is this one, right? And that's how from here the Tata Motors is reacted in the Tata Motors is basically the upside from here, right? Because it is near to support band. So that's kind of trade that you should have in your mind. You should trust with this, and then you can go back to the smaller time frames or 15 minutes and then execute, you know, where you are with reference to the initial price or the initial price zone, right? So here I am very much command zone, so I'll be always looking here because it has already been corrected. Another case which you would like the analysis of Nifty. Hmm? Say we of Nifty here, go and add Nifty futures, NSC, NSCFO, NSCF. I just need to select the options. I select the P, option index, Nifty, and I'm interested in the current month. To the analysis of the Nifty. Have I remove everything, and let's do a typical analysis of Nifty. Go to the daily chart, right? Right. So you see, Nifty have, hmm, which it has broken a major support zone. So here, if I just simply draw this rough calculation, so it has a major resistance on the double top here. Now it has a breakout, and remember, simply buy once you have the breakout, right? Please wait for the confirmation till it reaches here, and then from here the confirmation of the breakout long somewhere here, and you read this. Anybody could tell me what is this? That's a clear cut sign the market it's reversing from here, right? So you make your long close here and then become short here, and here as the price will reach to your again to the major support region, because that you see how the price has been reacting from here, right? It is having strength, and that's why after correcting for last 7, this is one way of the analysis, right? Now let's see another way of analysis. Like I just remove all those tools here again. And then I go for the retracements that this Nifty is moving. So I go and go for the retracements. Okay. I click on the lower part where I think this move has been started from here. And then I simply go and touch the highest part of that move. You see how beautiful it is reacting with reference to the levels. Since Nifty has broken this 23.6% level, it will definitely go to the 38.2% level. And once it breaks the 38.2% level, it approximately goes to the 50% level. And again, from here, it has been reacted and it starts to move up. So it has broken this 38.2% retracement level. Then the immediate target for this, it's for the 23.6%, means Nifty could go from here to 10,300 pretty easily. Actually, around 10,330 also. So that is how you should trade, and always remember, just trade with your friend, which is Mr. Stop Loss, and with your proper risk and reward. Now, a lot of people have asked me actually how to put the stop loss, where should be the. So again, if you could remember, for the stop losses, we every time we go to the find the ATR, right? So let's go and find the ATR daily. Uh, Daily ATR 87. This is on a daily chart. Could move rough lines up, or you just need necessarily 100 or something. Daily would be your execution here. Here it's something around. So in the rules, we should have your ATR. So roughly around 20, you take a trade in should be or below, right? So that's how deal with this. Show you like that is pretty. If you know the natural, but in certain Nifty 50, it's the best to have this. So Nifty base up in your portfolio. If the people are doing the mutual thing, they just use, because what from 1000 and Echo could actually gives you that kind of FTBs. FTB. All the 50 in the form of equity, any particular time for an unlimited time, and you should believe in the growth story of the Nifty and our strength in our Indian economy, right? So this is the future and future trading, its concepts and the strategies and how you should trade accordingly with the trend. And trend is your friend until it bends. So just follow simple trends, and you can use any of the other techniques which I have already taught you, like a super trend. If I go with the super trend only, then you can just simply follow that, and then you can have. Only thing is that you needs to follow with a rigorous discipline and a mindset, right? So since morning the Nifty was up with reference to the future trend, and if you remain in that trend with your stop loss, that's roughly the 20 points from here, and you can have huge profits. Similarly, on the previous day the super trend was up, so you remain short with your 20 points up, and you could have a very good profits, right? So, and also always I have shown you various things, so just choose one of the thing which suits you, like super trend, moving average crossovers, MACD, RSI, CCI, buy sell line, or anything, right? The basic thing which you needs to understand here in the future trading, it's your risk and reward. What is leverage? You should understand from which your margin, what kind of money that actually you are controlling, and how it could be beneficial to you. With small amount you are controlling a very big amount, but you have to manage your risk. So it's basically all from my end. And in the next class, when I'll be in India, we'll discuss about this, you know, this currency trading. I think that's also a very good era where everyone has to be. So if you have any question, you can just ask me now. Do you want me to analyze any of your stocks? So please just give me the list of your stock which you want to analyze. Right. So, okay. So let's, I think this session would be useful to you in terms of the understanding the future concepts and the strategies. And in next webinar, we will concentrate on the forex trading, basically the currency trading. What is this? How you could be beneficial by just simply following few strategies, right? So, have a nice evening to all of you, and happy trading. And I'll see you next Thursday, right? Take care till then. Bye bye. Good night.